Good afternoon, ladies and gentlemen. I am Pelshia, moderator for the conference call. Welcome to 5paisa Capital Ltd. Q2FY26 earnings conference call. We have with us today Mr. Gaurav Seth, MD and CEO, and Mr. Gaurav Munjal, Whole-time Director and CFO, and Mr. Amaya Agniotri, Whole-time Director and CTO from 5paisa Capital Ltd. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note that this conference is being recorded. I would now like to hand over the floor to Mr. Gaurav Seth. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the Q2 FY26 earnings call. Let me start off with giving a little bit of background on what happened in the last quarter. So during Q2 FY26, equity markets remained volatile amid tariff-related uncertainties, persistent FII outflows, and rising geopolitical tensions that weighed on investor sentiment. While sustained FII selling kept market sentiment subdued, domestic institutional investors continued to act as a strong counterbalancing force. In the last quarter, foreign institutional investors recorded net outflows exceeding $100 billion, whereas exceeded $10 billion in outflows, whereas domestic institutional investors' inflows crossed $20 billion. These trends impacted overall market participation, with cash market ADTO declining 16.7% quarter-on-quarter to 39,770 crores, and FNO ADTO on a premium basis falling 13.6% quarter-on-quarter to 55,570 crore at the industry level. Despite this moderation, the industry MTF book surpassed 1 lakh crore, reflecting resilient investor leverage appetite even in a volatile environment. Despite these challenging external backdrop, our focus remains on delivering best-in-class solutions, high-quality customer acquisition, and ensuring a strong lifetime value from each acquired customer. During this quarter, we executed several initiatives to drive relevant and cost-efficient acquisition, including a major SEO or search engine optimization turnaround, enhanced brand awareness campaigns across social and offline channels, and focused engagement events. These efforts led to a 20% quarter-on-quarter increase in new customer acquisition to over 95,000 customers, while our customer acquisition cost reduced by 15%, and the first-year revenue FYR improved by 25%, resulting in a more efficient payback profile. Our total customer base has now crossed 5 million, which is 50 lakh overall customers milestone. Our average daily turnover rose 19% quarter-on-quarter to 2.67 trillion rupees, underscoring robust trading activity. We also accelerated growth in our MTF business through introducing competitive interest rates starting as low as 0.026% per day, and expanded universe of eligible securities from 700 to over 1,200, and targeted marketing initiatives. These measures yielded encouraging results. MTF income grew by 22% quarter-on-quarter, and the average client funding book expanded 17% quarter-on-quarter to 364 crores. Our mutual fund AUM increased to 1,647 crore, which is up 4.7% sequentially over the previous quarter. Despite market headwinds, total income for Q2 FY26 remained steady at 77.3 crores, broadly in line with the previous quarter. Marginal rise in expenses was mainly driven by higher marketing and branding investments to strengthen acquisition quality and by higher finance costs linked to MTF income growth. PAT for the quarter stood at 9.48 crore, which was down 18% quarter-on-quarter. During the quarter, we also raised funds through commercial paper to support the MTF book expansion, ensuring adequate liquidity for future scaling. As of September 30th, 2025, our net worth stood at 626 crores. Now, on the product and technology front, we continue to enhance trading efficiency, user experience, and platform depth. Several key upgrades were implemented during the quarter to improve speed, analytics, onboarding, and payments, further reinforcing our position as a next-generation trading ecosystem for both active traders and long-term investors. We upgraded our digital onboarding journey with the introduction of a real-time bank verification, PAN fetch via mobile, and a pinless DigiLocker integration for effortless KYC. Additionally, we launched a dedicated in-app ETF dashboard, one-stop interface for smart ETF investing, and enhanced our payment gateways to ensure faster and smoother SIP payment processing for mutual fund investors. We also revamped an MTF journey by introducing a pay later option, enabling an unlimited holding period and offering a seamless convert to delivery feature for enhanced flexibility. For traders, we introduced the Scalper platform on the web, a unified interface built for speed, precision, and smarter trading decisions. The platform features a 3-in-1 charting interface with predefined templates, enabling ultra-fast order execution and convenient keyboard shortcuts for enhanced trading efficiency. We also launched a strategy analyzer on an FNO 360 platform, enabling traders to view payoff charts, combine open interest, and break-even insights, along with the Alpha Scan, which is offering 50 pre-built scanners for faster strategy discovery and enhanced decision-making. Lastly, we have successfully implemented SEBI standardized validated UPI handles, enabling faster, safer, and fully compliant transactions for our users. We remain committed to continuous innovation, strengthening our product and technology stack while leveraging AI to further enhance customer experience and engagement. With that, I conclude my opening remarks and now invite floor for any questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The first question comes from Eid Modi from RV Investments. Please go ahead.
Good morning, sir. Sir, any specific reason for degrowth in your revenue from last September 2023?
So the overall, if you look, the income or the revenue is 1% down compared to the last quarter. So it's not a significant degrowth. Overall volumes for the industry have also fallen in the last quarter, as I think mentioned in my speech, by 16% for cash and about 14% for FNO. So our growth, our reduction in revenue is in line with those numbers.
So my next question is, if you...
Yes, please go ahead.
Wait, sir. Wait. No, sir. If we see Demat account base in a Q2, so it's 207 million. But if we see active clients, it's only 46%. Means it's very low now. So there is a specific reason for it.
You're talking about our active base?
Yes, sir. As compared to Demat account base.
Yeah.
There are 207 million Demat account, but
yeah,
active clients are only 46 million.
Sir, he's asking at industry level, the total percentage is not 46, it is coming 25%. So overall 20 crore Demat account is there and only 5 crore is active. The question is around the same.
Exactly.
Okay, so actually that at an end, so I can answer at both not so much at the industry level. I can give you that perspective at our specific to 5paisa. But in general, there are people who have come into the market who are not either they came into the market for making quick gains during the entire frenzy, and some of them also came into the market and opened F&O accounts as well as investment accounts. And when there is volatility and there is no easy way out or easy money to be made, they basically, what happens is that start to fall off. I mean, this is typically, even if you ignore the numbers, this is a typical behavior. So while a lot of the platforms, including us, end up opening these accounts, a lot of them actually then start to fall off or become inactive, or either they become completely inactive or their activity overall starts to reduce. And it is only natural, right? I mean, this investing and including trading is a long-term journey. So you have to be in the market for some time. You have to continuously upgrade yourself, and you have to have effective risk management. And that is something that we espouse through all of the sessions that we do, both online. In fact, a lot of investment that we are doing in offline sessions, imparting that philosophy, how to become a better trader, how to become a better investor. So that is really the reason. In our case, I think our number is closer to either 392,000 or between 395,000 to 4 lakh active base. If we compare the number of active clients who are trading, even so, we take multiple metrics. So one, we take how many people are active on a single day, who are passing orders, and who are doing on a monthly basis. It is actually almost in line with what was there in Q1. So Q1 and Q2, it's almost in line, and there is a reduction of about 10 lakh orders on a quarterly basis. Over a 3-month period, there's a reduction of 10 lakh orders from these clients, right? So definitely, some part of macro and some part of market has taken a toll on the activity.
Sure, sir. Sir, any growth guidance for FY26?
Any, sorry?
Growth guidance, revenue or deal?
No, I'd not like to make any forward-looking statements, because a lot of what that we do is based on no matter how well we do on the product side and marketing side, it's also dependent on the markets. So, yeah, but we are heads down into execution on improving our product. That is our primary focus. So we'll continue to do that.
Oh, sir, is H2 will be same as H1 or it will be better?
We expect it to be better, but the markets have to contribute equally, right? So that is something I can't predict. I'm hoping that H2 will be better.
Thank you, sir.
Thank you.
Thank you. The next question comes from Sonal Minas from Prescient Capital. Please go ahead.
Hi, this is Sonal Minas. I hope I'm audible. I have 2 questions. Sir, first I wanted to understand, since you've been relentlessly focusing on optimizing your client acquisition cost, so what is an LTV which is a baseline that you're okay with, and how would you compare that to, let's say, market leaders? If you could just subjectively share something around what is the time horizon of break-even of a particular client that you're okay with as per your funnels. If you could just share some.
Yeah. Sure. So our latest CACs in the range of 700 to 750, which is the client acquisition cost. And our first year revenue is kind of in the range of between 1,000 to 1,200. Typically, our sweet spot, we would want to answer your question, a 6 to 7 month payback period for our clients, for the clients that we acquire. Obviously, it varies, sometimes less, sometimes more, but this is what we would like it to be. And that is best in class, if you look at the industry as well.
Great. And this revenue that you speak about, this stays over a time slice of 1 year, 2 year, 3 year, or there is a tapering of revenue of these clients as they mature with you?
Yeah. So typically, what ends up happening is that there is what I've given you is an FIR, which is the first year revenue number. but over a period of time, on an average, there is decay, right? Now it varies. Sometimes it is, for certain clients, it could be as high as like 40% in year 2 and then 15% after that, and so on and so forth. So when we do our projections and our numbers, we typically account that decay into the mix. That, you know, if I'm 100 rupees from someone, then it probably would become, you know, 70 rupees after the end year 1, or 60 rupees after year 1, so on and so forth. Yes. So yes, but to answer your question, yes, there is a decay in FIR over a period of time from new clients.
Understand that. Another thing, speaking about your product rollout, you explained the features in the app. Is there an NPS score, because you have an app rating, the CSAT, given in the slide deck? Is there an NPS score which you track? I'm sure you would, but which you can share for us to understand how good is the app, how good is the platform, how good is the satisfaction of the customers basically on the platform?
Yeah, so I'll give you my personal opinion on NPS. So we do track NPS from time to time. But usually it is more, what I've seen is that, like, the NPS ratings do come up randomly for, like, I'm not talking about 5paisa, but it's just about industry, right? And it is really on the mood of the customer. So if you're in a good mood, everything is going right, you know, you push. I'm talking about how this is done. And an NPS score is shown to the customer, and they might go anything from 1 to 10, right? And 9 comes and you're very happy, and, you know, 5 comes, you're very, very not that happy, right? So the right metrics to be used, which we think of it as CSAT scores, etc., which are very more focused on a function, right? So let's say in our case, if you have a problem, if you're closing a ticket with customer service, or how you're doing a particular transaction on the app, whether it is a derivative transaction or a cash transaction, or how you are, let's say, doing a pay-in, like, you know, trying to move funds. So all of those specific transactions, I mean, my view is that, like, those are more indicative of actual customer satisfaction than NPS scores in general. But we typically refer to app ratings as a guiding light, because that is something which is public, which is something which people, you know, typically, if they are taking time to go and write them, we take them very, very seriously. And our endeavor is also continuously keep scaling the app ratings, both on Android and on the App Store.
Got it, sir. All right. I'll fall back in the queue. I have some questions. I'll fall back in the queue. Yeah. Thanks.
Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Sonal Minhas from Prescient Capital. Please go ahead.
Hi. Thanks for taking my question. Given the fact that I wanted to understand more the zoomed out market dynamics, the way I think things are playing out in the whole discount brokerage space, just wanted to understand, like, from a positioning perspective, I think you focused on product specifications, you focused on client customer satisfaction. How does, let's say, a customer who is coming in, he or she distinguish you from, let's say, the top 5 other players in the market? And are the product features good enough retention matrices for them to stay put with you? Anything which you can share in regard to retention of customers apart from product or around the product, that will be helpful, just to figure out how you plan to go, given the space is fairly cluttered to my understanding.
Yeah, no, I mean, that goes without saying. So yes, completely agree with your statement and observation. Space is cluttered, it's hyper competitive. So I'll give you a little bit of a background. So I think we've been in the space for a very long time.
Sure.
the fact is that in this space for longer than most players who, the most common names that you see now, who have really come up after, post-COVID, when there was this whole market expansion and the demat accounts went 10x, whatever, right? 20 crore demat accounts and so on and so forth. So we have a legacy. We know this space very well. There is definitely, so there are two aspects to this business as I see it. One is obviously awareness, right? So unless you are aware, you won't go and download 5paisa or for that matter any other app. So that is something that we definitely have to raise our profile on from an awareness perspective, which is a combination of brand, marketing, and so on and so forth. And we'll be making a lot of changes and investments in that area. So people start to identify, not that they don't, but the newer people start to identify with the brand, etc. Now, on top of that, I think the major thing is even if you get a customer to the app or to the platform, in this space, I believe, it is very, very important to have a great product. And once you've experienced, and when you have 10 other options or 5 other options, the retention is a direct function of two things in my mind. One is pricing, where you would, it's already discounted. So a lot of players out there are anyway discount brokers or zero brokers and so on and so forth, right? So there's not much to do there. So the second thing becomes product. So when you are, especially if you are a power user, and our focus has been on power users, right? So people who are in the market who are serious traders and serious investors, they know 5paisa, or at least once you experience the product, they know that, this is a place you can stay. In terms of the feature set itself is concerned, it's very, very, it's complete from a product standpoint. And we continually build that because it is always work in progress. In this space, it's never, you can never say that, look, you are completely done. And we've done a lot of work over the last 3 years, and it continues in terms of completely upgrading our tech stack, changing our user experience, and so on and so forth. And you will see a lot of changes coming in next year as well. So our strategy definitely is to raise awareness, but it's also more so that once people try us, they want to stick with us. Some of the features which are available are definitely best in class, definitely on the brokerage side, which only very few of our peers are offering. So if you're a serious trader, 5paisa does offer you the entire set, which a novice trader might say, okay, I can go get it somewhere else. But if you're a seasoned guy, you would get it in 5paisa.
Understand that. And where would that show up in terms of matrices that are available to public market investors like us? Like if I were to just triangulate that with data. So just trying to figure it out.
That doesn't show up separately in terms of numbers that we publish, unfortunately, because we would publish our customer numbers, and we'll publish our revenue and the financials and what we've acquired. But typically the metric I can't share with you, but it typically shows up in the ARPU or the average revenue per user, right? So even though you might have fewer customers, but the average ARPUs or the average revenue per user is higher, which is true for us. So we look at that and then we see. So what is the level of activity of a user on your platform? And the level of activity of the user of platform directly translates to, one is to activity and their comfort and their trust in the platform, and second directly to revenue. Because you could onboard.
Please go ahead.
Yes, sorry, go ahead.
No,
I'm saying that you could onboard and then somebody else had the question, you could onboard and then they go dormant. So that doesn't mean anything, and that will show up in your average revenue per user.
Sure. So your broking and allied revenue divided by active users is a good, like a top of the funnel number that somebody can track, basically, just to triangulate with others, because not many people share ARPU in this industry, publicly.
So our
Yeah.
calculation is actually very easy. You need to add other income, because other income includes, I understand it includes float income, but ultimately it's a part of income. I mean, which
Yes.
broker is getting. So if you divide, I'm just doing the simple maths. We have active customer base of 3.8 lakhs. So you just divide with 77 crore, you will get the number, which comes around, 8,000, 9,000 per year. So this is
This is the number. Okay. So
Yes.
Another question around this. Given that you have excelled in terms of your features for power users, directionally, if not now, let's say maybe like a 3-4 year kind of an outlook, does it make a natural sense for you to become like a platform like AlphaGraph where you're also giving algos to people? That's just an example, but it's an extension where you have algos and people come and trade on platform. How just trying to build it up.
Yeah. No, I can take that. So in any case, today we have an algo offering, right? So so there are APIs or open APIs that we expose, and there are a lot of our customers both on retail side and basically it's all retail. Either it's retail through partners or it's direct retail. They use our APIs to run algo strategies on our platform. So our platform supports algos in the first place, and we've been doing this for a long time.
Sure.
And we're also building something which on algos and so on and so forth, which is in the pipeline, which you would see coming through. And I think you were alluding to AlphaGraph. So yes, that is definitely something that we're looking at.
Otherwise, it's very difficult to differentiate in this space, given how things are. Everybody is pricing down. So that is the natural direction for somebody to take. And I'm just trying to think aloud and trying to take your feedback on it, basically. Yeah, that's why.
No, it's a great suggestion. Thank you.
Okay, all right. Thank you. Thanks for taking my question. Just that's about it from my side. Thank you.
Yeah.
Thank you. The next question comes from Prince Akash, an individual investor. Please go ahead.
Hello, can you hear me?
Yes, go ahead, please.
Yeah. Thank you, sir. Thank you for taking my question. I just have one single question that, just in case the industry trends and the trading and everything, it keeps like this, it stays a bit suppressed. Do you see yourself or maybe an industry-wide phenomenon where you think that, the charges on the delivery investment sides, they might increase going forward? If not industry-wide, maybe do you see yourself doing that?
So, great question. We've always taken the view that the services that are provided have to stand on their own. So we anyway charge 20 rupees for equity delivery. And of course, F&O is charged in any case. But to your larger point, I think my personal view, okay, so this is me as an individual. I think, yes, you could see a rise in, or people will start to charge for things that are completely free. Because the cross-subsidization of services is going to end, right? So whether it is acquiring via mutual funds and going to F&O trading, or whether it is not charging for equity delivery and so on and so forth. That is why you see in the market people building MTF books, people talking about starting to charge for, or starting to charge something, whatever that might be, 5 rupees, 10 rupees, 15 rupees, 30 rupees, 20 rupees, could be anything. But yes, it is likely to go that way, because if the volumes are going to be further impacted, then some of these decisions will have to be taken. That's my personal view.
So just a follow-up thing, do you have any plans for doing this like by yourself or in your, forward coming, or would you like to jump in as the industry, does this widespread?
Sorry, if you don't mind, I did not follow the question.
I was asking that whether do you have any plans like that already set in that you would increase the, delivery trade prices and everything, or would you jump in as the industry, applies this industry-wide?
No, we don't have any specific plans at the moment, but these are things that we have to we have to assess from time to time. As I said, we are not free on equity delivery. We already charge 20 rupees. So
Okay.
for us, it's less of an issue.
Okay. Thank you, sir. That was all.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Chinmay Neema from Prescient Capital. Please go ahead.
Good afternoon, sir. Sir, I just wanted to follow up on the previous question about the dormant users. So, behaviorally, are these people who you expect to start trading again once broadly the environment recovers and trading activity starts? Or are these people who could have also moved to new apps or who could have stopped using the platform, and then you'll have to, they'll bear new customer acquisition cost before you can expect revenue from them?
So it depends on there is no plain vanilla broad brush answer to this. Typically, why people go dormant, there are a couple reasons. One reason of dormancy is that it is very genuine. For example, you have some kind of a financial constraint and you're not making returns in the market and you have to deploy capital. And we've heard this client feedback ourselves where they have no problem with the platform. They are just kind of constraining their trades for a while. And as the markets recover or their financial situation or liquidity situation improves, they come back with full force. And that quarter is a great user, and we get that feedback all the time. So there is a certain, I don't know, I can't say what is the percentage of that, but there are people who are, so these are the people who eventually recover, right? So they go dormant, but the dormancy is not permanent. So they come back. Then there is a second category of users who don't know what they are doing. And they, as I said, they entered in a frenzy, especially in trading, and maybe they didn't make some losses, so they want to just kind of step back from the market, reassess situation, and learn and come back again. So those are the ones who are likely to go permanently dormant for a while. And then there is a third category of people who would go for other apps because the pricing is better or they like the product better. It is equally possible. So from our perspective, we continuously poll clients whenever we see sort of unusual dormancy beyond certain norms, and then we try to incorporate, like if it is a pricing suggestion, then we see if it makes sense or not. But if it is a product suggestion, typically we almost 9 out of 10 times act on it, and we put it in the roadmap. If that feedback is being received from multiple customers, even if it is a great feedback from one customer, we act on it because we don't want people to leave and go for other platforms. For situations where I have no issues and my liquidity situation doesn't permit me to invest in the market, so that's why I'm dormant. And that happens also on mutual funds because people pause their SIPs for a while and so on and so forth, which is natural behavior. It's nothing to be concerned about.
Sure, sir. Got it. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. The next question comes from Vidut Dayal, an individual investor. Please go ahead.
Hi, Gaurav. Am I audible?
Yes.
Hi, Gaurav. So, I've been watching the company for a while, and the product upgrade cycle happened with your predecessors. So I think it's almost 2 years now. So the question I had was that are we trying to catch up with people who are ahead of us, or are we trying to exceed them? So there are at least 4 companies that I see, Angel, Grow, Zerodha, and Dhan, which are, I think, at least 20 times our size. So you have an ambition to be a top 3 or a top 5 player. So how do we expect to catch up?
Okay. So, yes, you're right that some of these upgrades have been happening even before it's not that we started this year. So I think there are 2 parts to it. One part is the core tech transformation because we have had also in some cases, certain technologies which are proprietary, like our OMS, RMS, and certain things on the front end, like a Flutter upgrade and so on and so forth. Those had to be done. This is hard work. It's not easy that you can do it in a day. So those are things that have been completed. I think last year we completed a complete move to Flutter, and right now we are in the midst of kind of replatforming our core system, which we expect to conclude and finally do the transition sometime in next quarter. Yes, it is tough because the standards are high and the new people coming in, they have a blank slate to start with the product, whereas in existing structure we have to work through some of the pieces that need to be transformed first and some decisions to be taken, which takes a little bit of a time. So I don't know if that answers your question, but to catch up is after a certain point in time, we don't want to put a benchmark of someone else to our situation. We know what we are strong at, and going forward, all of the product improvements are obviously we look at competition, we look at the names that you're talking about, but we are setting our own independent product roadmap to either be better than them or at par with them, whatever you want to call it, because we get direct feedback from our customers, the loyal 5paisa customers. We want more of it. And I think if you start to always be in a situation where you're just trying to catch up and say that here are the 3 top guys in the market, let me be like them. By the time you reach there, they move somewhere else. So you have to chart your own course, and that's exactly what we're doing.
No, so, that's a great answer on the product side. I just meant on the market share side and the revenue and the scale side. How do we, sort of get to a top 3 position?
So, I mean, that is work in progress. I mean, I can't share with you the entire strategy of the public company. But
I understand. But what I'm trying to ask is that even likely in the next 3 years?
It is likely.
Most of these companies are not public, but the numbers that Grow and Dhan have just thrown out are just, surprising.
Yes, and we also know the reasons of why those numbers are where they are. So, and those are things that we also understand. I think it's a matter of execution. I think it is likely, if not 3 years, in 5 years. Yeah.
Okay, that's great. And one final question, there was a lot of qualitative improvement. We had a bigger MTF book. We increased our customer acquisition. Everything was good. And I understand the cost side. But why did the revenue on a Q-on-Q basis not inch up at all?
Because if you see at the exchange level, both the cash volumes as well as on an ADTO basis and F&O on a premium basis and notional both have come down. One by 16%, one by 13%. Now, that is not justification. We have also fallen. We have fallen a little more than
No. On a Q-on-Q basis, we have increased, Gaurav.
No. So what you are saying that the income side, our brokerage income is almost same. In spite of cash and F&O turnover is down, although in spite of our number of orders is almost same. But we grown up in the allied broking. On the other side, other income, there is a down of 2 and 2.5 crore because of the repo rate. Because ultimately you are enjoying the interest rate, FD interest rate of the client funds as well as your own funds. But repo rate has been down, and hence there is a slight effect of that income, and hence our overall income is almost same for the last quarter.
Right. Okay. Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. There are no further questions. Now I hand over the floor to management for closing comments.
Thank you, everyone. good bunch of questions got us thinking. Thank you again for joining the call. And if you have any additional questions, there is a email ID enclosed that you can reach us and we can converse. Thank you.
Yeah. Thank you, everyone. Wish you a very happy Diwali and happy. Yeah.
Thank you, sir.
Good.
Ladies and gentlemen, this concludes your conference call for today. Thank you for your participation and for using Sabha's conference call service. You may disconnect your lines now. Thank you and have a good day.
Thank you. Yeah.
a top account. If you were to eliminate the cyber impact coming through that account, what have been the growth for automotive in Q2 if I were to evaluate?
Yeah, we already discussed about it, right? Instead of a negative, or a flat or a 0.5% constant currency negative, we would have definitely gone into a positive zone.
Okay. And you expect the growth to accelerate from here in quarter 3, quarter 4, given the kind of commentary that you made on automotive side, ramping up on majority of the deals, and again, positive commentary about around the automotive.
Yeah, absolutely.
And lastly, we saw a significant jump on the fixed price contract by 400 basis points. Anything to read there? Is it more to deal with the ramp up that we see on the automotive side?
Yeah, there's nothing. I don't think we need to read too much into it. We've had a few deals that had come our way, which were fixed bid engagements, including in our system integration business, which showed a good increase in revenue uptick. I think a few of those deals came through, and I think that helped us in the quarter. But I think eventually we will go. I mean, if you look at it from a next H2 perspective, we don't see a big change in the ratios.
Okay. Thank you so much, Anas.
Thank you.
Thank you. Our next question comes from Rohit Jain from Tara Capital Partners. Please go ahead.
Yeah, hi. Can you hear me?
Yes, sir, you're audible.
Yeah, hi. Thanks for the opportunity. So just wanted to get some sense for the coming quarters. Now, obviously, on the positive side, you said that automotive and healthcare are going to see continued traction. But then on the other hand, the media vertical is going to see a slowdown, given that this quarter had higher growth because of one deal ramp up. And then it is also a furlough quarter. So net, how should we think about the growth in the coming quarters at a company consolidated level?
I've talked about it earlier as well. We are definitely confident that H2 will, a growth perspective will be definitely far better than the H1.
And how should we think about margins, given that there is tailwind from better growth, but then there are headwinds from maybe the effects not being as supportive or not contributing as much as it did this quarter, and then there's also a wage hike?
No, so I think, incrementally, right, as the revenues pick up, automatically the margin profile will also pick up. Our utilization, as you said, we've touched 70%. The focus is to see how to get to 75% by end of the financial year. If we achieve that, right, those objectives, we will be able to manage, the headwinds like wage hike and, all of that, right, and still show margin recovery.
So when you say still show margin recovery, that is versus H1, or that is versus, the average of last year, the full last year margin?
Versus H1.
Versus H1. Okay. Thank you. Thanks a lot.
Thank you. Our next question comes from Karthik Vaidyanathan, an investor. Please go ahead.
Yeah. Thanks for the opportunity. I have a couple of questions. I think first is I wanted to know if you are involved with any hyperscaler data centers. Do you work with companies like NVIDIA to integrate some of the AI-based solutions? Any light you can throw on that would be nice.
Yeah, maybe I can take that. Yes, we do. In fact, we have our own. I will not boast about it, but we do have our own mini NVIDIA data center that we set up ourselves for our own AI experimentation and workloads. If you look at the work that we're doing and the award that we announced with Dell, you'll automatically know that that is also to do with infrastructure that will go into on-prem data centers, and large part of them are targeting AI workloads. So the short answer, yes.
Okay. And what are those use cases? Is it on the ADAS side or the healthcare side? How are you? Basically, there's this whole thing about efficiency. I mean, one is, of course, reducing the headcount, and because you're able to take up the task. Of course, if you can throw light on that, that is fine. But is there some new use cases that these AI services that are giving you that you're getting much more efficient? Any light on that? Those use cases would be useful. Just to understand the long-term vision here, right? That's the question.
Sure. So, Karthik, maybe I'll try and keep it simple. I think we're looking at it in two parts. One is how can we operate and deliver better, which is essentially to do with what gains does AI and GenAI provide for productivity, for quality, and therefore resultant cost benefit. The other part is what does it do to innovation and features, right? So if you look at ADAS, if you look at the predictive capabilities of analytical capabilities of radiology or MRIs and so on and so forth, that all is innovation of features because it is not doing what is already being done. It is actually driving something that has not existed before, right?
Okay.
And not all of that is GenAI. Please note, a lot of that is AI and not GenAI. That continues a journey that we strongly drive because we are a product engineering company, and this is intimately connected to how products can function better, can deliver more features or value. The operate better, I think, is a journey that we are taking very carefully in consultation and in conjunction with customers in terms of where is it that you really get benefits of GenAI and productivity, and how much of that is clear of any infringement, liability, and risk. So there, I think the journey is definite but careful and calibrated. The first one, innovation and features, is all out, and that's a journey that we've been on for actually about 14-15 years now. Because we look at as we announced our own autonomous journey starting 2014.
Okay. I just that adds. Thanks for adding more. Just one additional question related to what I just asked, right? Because you mentioned radiology, I just thought, there is also this use cases where breast cancers, whether you want to do benign or malignant, those are healthcare related stuff. Are you also working in those places? Because that is also AI, not Gen AI, just regular AI, just looking at patterns and trying to identify on the healthcare side. Are you looking at?
Absolutely. So I think
because that's a very strong use case, right? Just wanted to know if you have excellent products. You can scan images just like that, and at least if you can identify these patterns, that can go a long way in terms of serving the needs.
Absolutely. I think that's the direction healthcare is taking, which is how do you detect earlier and how do you detect better. I think we are on both paths.
Okay. Yeah, very good to know. And good luck, and wishing you all the best. Thank you.
Okay. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, thank you, Shashank, and thank you all for the patience and all the questions. We look forward to a much better H2, and look forward to talking to you again, for the Q3 conference. Thank you very much. Take care. Bye bye.
Thank you. On behalf of Tata Elxsi Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.